Government Order of the Day, number 3.
Taxation, Livestock, Valuation, Assets, Expenditure and Remedial Matters Bill, first reading.
Honourable Peter Dunn.
Speaker, I move that the Taxation, Livestock, Valuation, Assets, Expenditure and Remedial Matters Bill be now read a first time, and I nominate the Finance and Expenditure Committee to consider this bill. Mr Speaker, like most economies, ours has been battered by the global financial crisis, and consequently the government's focus has been on positioning it for the future to take advantage of global economic recovery. And in that context, it is right that the tax system should ensure that all taxpayers pay their fair share of tax, thereby reducing our national debt burden. And at the same time, it is also appropriate that the tax system seek to minimise the burden it places on business. Mr Speaker, this bill contains measures that are aimed at both those objectives. To that end, the bill proposes to tighten the rules relating to the tax deductibility of expenditure relating to assets such as holiday homes, boats and aircrafts that the owner uses both privately and to earn income. The government has no argument with people owning and enjoying such assets. These tax changes are not a form of envy politics, but really about getting a fair outcome. And it's a principle of our system that a person is allowed a tax deduction for expenditure if it is incurred in deriving their income or in the course of carrying on a business. But unfairness arises because owners claim that the house is available for rent during significant periods of the year when it is actually unoccupied. And that provides them with a basis for claiming tax deductions for expenses relating to the period the property is empty. Now, if the owner holds the asset primarily for private enjoyment, this is simply a taxpayer subsidised asset, and it is very difficult to justify. And members may recall that this proposal was part of the Budget 2012 announcements. Also raised at the time was a change to livestock valuation rules, which made elections to use the herd scheme generally irrevocable. And that again was a question of fairness. So a key component of this bill includes supporting provisions proposed to the livestock valuation rules, which made elections to use the herd scheme generally irrevocable. We had made the policy decision earlier. This bill puts that decision into effect. And what this bill does also is propose one exemption to the core herd irrevocability rule that we enacted as part of Budget 2012 and sets out new rules for the disposal of herd scheme livestock. Mr Speaker, the bill also makes some important GST changes to rectify a problem with our tax laws that disadvantage businesses that compete globally. Under the existing GST rules, a non-resident doing business in New Zealand can incur GST as an economic cost, and this makes our goods and our services less competitive. Our international competitors provide ways of reducing this cost, and frankly, sir, so should we. So the bill proposes to allow certain non-resident businesses to register for GST and claim input tax deductions for GST incurred on approximately the same basis as a resident registered person. Also of note in the bill are changes to the time periods for claiming refunds under the Income Tax Act 2007, provisions to ensure that expenditure on trees and plantings for erosion, shelter and water protection purposes is tax deductible, and some provisions to address anomalies that have been highlighted by the kiwi fruit PSA virus issue. Donee status is proposed for 3 organisations: the Hunger Project New Zealand, One Site New Zealand and the Fund for Timor. And finally, sir, the bill introduces a range of remedial amendments, including a better alignment of the primary sector amortisation rules with the general depreciation rules, the elimination of tax treatment mismatches for certain foreign currency hedges, and correcting a minor and unintended change to the tax treatment of MPs' allowances. Mr Speaker, I want to advise members that I intend to release a supplementary order paper to this bill which will cover 2 main matters. Broadly speaking, those matters are changes to the tax treatment of car parks and the inclusion of more non-cash benefits in social assistance calculations, and lease inducements and surrender payments. The government has already made announcements in respect of its intentions with respect to both of those matters, and my intention is that the SOP will be released in sufficient time to allow it to be considered by the Select Committee alongside the other provisions of this bill, and for submissions to be called on those provisions as well as the provisions in the bill. So, sir, these are the main features of this legislation. Taken together, they will help strengthen our tax system and support our economy. They are consistent with our overall objectives of making the tax system fairer and modernising its provisions to keep pace with the times, and making it easier for taxpayers, both personal and corporate, to comply and to meet their obligations. And against that backdrop, sir, I am very pleased to commend this bill to the House.
The question is that the motion is agreed to. David Clark.